A $1 billion Mercedes-Benz-Branded luxury tower is being built in Dubai. A new Mercedes-Benz-Branded apartment building will begin to rise in Dubai this year. The $1 billion, 65-story tower, built by local real estate developer Donnelly Properties, will break ground in the coming months. It will offer 150 residences, consisting of 2 to 4 bedroom units and 5 penthouses. Pricing starts at $2.7 million. Located in Dubai's downtown, the futuristic-looking tower will feature views of the Burj Khalifa, the world's tallest skyscraper. Employment growth: which sectors are doing the heavy lifting? Chief economist Eugenio J. Aliman discusses current economic conditions. In the middle of 2023 we argued that, according to our forecast for GDP at the time for the whole of 2023, employment was growing too fast and that it would have to slow considerably during the second half of the year. Our forecast was lower than what actual growth was for the whole year, but nevertheless, employment slowed down considerably during the second half of the year, albeit not as much as we were expecting. Here's what you need to know about markets and macro this week. Global macro. The soft landing continues. Core PCE, the Fed's preferred measure of inflation, is running below 2% annualized over the past 6 months. Stocks are at the ATH, and both nominal and real growth are strong. This week we got a smorgasbord of data, and the key releases were strong GDP, strong ISM, strong home sales, and soft inflation. Again, you need to dig pretty deep into arcane data or slice and dice the headlines with a Ginsu to tease out anything negative. Macro and markets: risk of reheating. The consensus in policymakers expect the U.S. economy to slow. Recent data indicates the opposite is happening. Monetary and fiscal policy easing is on its way, and that risks fueling an already strong economy. Wild swings in consensus expectations. Around this time a year ago, consensus expectations were that the U.S. and global economy would slide into a recession with rising unemployment and falling economic growth that would force central banks to ease monetary policy. Instead, the opposite happened. High points for U.S. economic data scheduled for January 29th week. The first FOMC meeting of 2024 is Tuesday and Wednesday, January 30th to 31st. Fed policymakers are expected to hold the Fed funds target rate at 5.25 to 5.50%, pausing in the current rate cycle for the fourth meeting in a row. The FOMC will not outright say that rates have peaked, but it is likely the case with signs of a slowdown in economic growth, a cooling in the labor market as it rebalances, and as inflation makes its bumpy way back toward the 2% inflation objective. Thank you.